far we studied, whatever accounts are there are divided into two broad categories. That is as per the traditional approach and as per the modern approach. As per the traditional approach, accounts are divided into real account, personal account, and nominal account. And as per the modern approach, accounts are divided into asset, liabilities, expenses, income, and capital. Right? So based on these two approaches, now we have to move further and we have to see identification of accounts. Right? So first of all, see here. The first item is capital. So what is capital? As per the modern approach, as per the traditional approach. If I'm talking about the modern approach, then capital fall under the category of personal account, right? Why it is a personal account? Because capital is belong to the person. If you are planning to start any small business, you are going to invest your money into that business. For example, you are starting a stationery shop and you have invested 50 lakh rupees into that. So that 50 lakh rupees of investment done by you is your capital. So capital is always related to the person, or you can say the owner of the business. Hence, as per the traditional approach, capital falls under the category of personal account. Now from modern approach. So as per the modern approach, capital is your liability. So why capital is liability? See, the business and owner are distinct persons. They are different. If you are starting a business and investing 50 lakh rupees into the business, so at the end of the business, or you can say at the closure of the business, you are expecting to recover that 50 lakh rupees from the business, right? So from business point of view, this capital is liability, right? So at the end of the closure of the business or liquidation of the business, that 50 lakh rupees needs to be recovered by the owner. That's why as per the traditional, as per the modern approach, the liability is the answer for the capital. So next is your building. So building is asset. It's a property of the business. So as per the modern approach, I can say as per the modern approach, it's an asset. And so we know that all assets, all property of your business fall under the category of real account as per the modern approach. So building is your real account, right? Then, so next is carriage inward. What is carriage inward basically? So carriage inward is nothing but expenses incurred by you while purchasing the goods. Carriage inward is nothing but expenses incurred by you for transportation of those goods and those material from a market up to the godown or up to the warehouse. That is carriage inward, right? So as we know, carriage inward is expenses. So as per the modern approach, so I can say as per the modern approach, this carriage inward is expenses, fall under the category of expenses. But sir, what about traditional approach? So in traditional approach, we know income and expenses fall under the category of nominal account. So we are going to consider these as a nominal account, right? So next is your cash. So we know cash for any business, cash is their property, and property is nothing but the asset. So as per the modern approach, cash is my asset. And as per the traditional approach, we know, sir, property and assets fall under the category of real account. So it's a real account. Then, so next is commission received. So commission received, anything received by you is your income, right? So as per the modern approach, any amount received by you is your income. So it will fall under the account of income. So then what about as per the traditional approach? So as per the traditional approach, we know income and expenses fall under the category of nominal account. So commission received we are going to record, or we have to identify as nominal account. Then, so next is bank. So bank is an artificial person, right? So bank is an artificial person. For example, State Bank of India, right? So if you are having a account in any bank, so that bank is an artificial person, and suppose you are the owner and you are having a bank account, then that is also a personal account, right? It's a person's account. So bank will fall under the category of personal account as per the traditional approach. Then what about, sir, as per the modern approach? So as per the modern approach, whatever amount that you are having in bank is always your asset, right? It's your property. So it will fall under the category of asset. Then, so next is purchase. So when you purchase anything, it means you are incurring expenses, right? So the purchase as per the modern approach will fall under the category of expenses. And so we know that as per the modern approach, so it's an expenses, and as per the traditional approach, any expenses fall under the category of nominal account. So it will be a nominal account. So next is regarding, so next is Chandru. So Chandru is a name of natural person, and name of any natural person so fall under the category of personal account, right? And when it comes to your modern approach, so a Chandru will be a, for example, if anything, any amount recoverable from Chandru, then he becomes a asset. If any amount payable to Chandru, then it becomes a liability. So it's depend upon the nature of transaction with him. So we can say it can be either asset or liability, or if it is a owner of the business and he give a capital to the business, or I can say it's a Chandru's capital, then we can consider it as a capital account as well. So next is outstanding wages. So what is outstanding wages? So anything payable, any expenses payable is known as outstanding, right? So outstanding wages, we have to categorize it as per the modern approach, as per the traditional approach. See, anything payable is always my liability. If I supposed to pay 50,000 rupees to some worker and I'm not paying it, so that is my liability. So it will fall under the category of liability as per your modern approach, right? So then what about as per the traditional approach? So we know as per the traditional approach, anything payable or any expenses, or I can say outstanding wages, it's a payable in nature, or any outstanding income which is recoverable in nature, it's a group of representative, right? Or a personal representative account. So it will be fall under the category of personal account, right? So this is the identification of accounts that we done with this question regarding or based on your modern approach as well as your traditional approach. Now next question we have to see regarding identification of accounts. See, the first is furniture. So furniture is property of your business, right? So any property, any assets as per the modern approach is your real account, right? And as per the traditional approach, it's a real account. As per the modern approach, it's an asset. So it will be categorized as an asset of your business. So next is sales. So when you do a sales of any product of your business, or you provide services to anyone, you received amount, you generate revenue, right? So that is income for you, right? So it will be categorized as income, as well as, so income and expenses fall under account of nominal account. So it's a nominal account as well, right? Then, so next is carriage outward. What is carriage outward? When you sold any goods, at that time you provide transportation services, right? So for traveling or for carrying those goods from your godown or from your shop up to the place of the customer, and that carriage outward is nothing but the transportation expenses, right? So that expenses that you are incurring for selling the goods, it's always an expenses for you. So it will be categorized as expenses, and expenses fall under the category of nominal account as well. So it will be classified as nominal account as well. Then, so next is bank overdraft. So what is bank overdraft? So bank overdraft is nothing but short-term loan, right? You have borrowed a money over and above of your current account balance. So that is nothing but your bank overdraft. So who is borrowing basically? So owner of the business, he is borrowing money from a bank. So that is known as bank overdraft. So bank overdraft we will be considering as a personal account. And as per the modern approach, so bank overdraft is my liability. We have to pay after some period of time. For example, after 11 months, we have to repay that loan to the bank because it's a short term in nature, right? Next is commission paid. So commission paid, anything paid is expenses. So it will be categorized as expenses, right? And expenses fall under the category of your nominal account. So next is purchase return. So what is purchase return basically? So purchase is expenses, right? Okay. So next is a purchase return. So what is purchase return basically? The goods that you purchase from a supplier, you are returning those goods to the supplier again because of some damages or because of not expectations that you are having with that goods, right? So you're returning those goods. So that is known as purchase return. So what we have to do about this purchase return, how we can identify, right? See, purchase, as we know, purchase is a expenses and that will fall under the category of nominal account. Similarly, so purchase return is also a nominal account as per your traditional approach. So first of all, purchase return as per the traditional approach is a nominal account. Now, so from modern approach, is it expenses? No, sir, it's not an expenses, right? So it will be categorized as contra expenses account. The term is contra expenses account, right? Then, so next is sales return. What is basically sales return means? So the goods that you sold to the customer is returning those goods to you because of not fulfilling the expectations, or because of the damage of the goods, right? So sales, so we consider sales as a income and we categorize into the nominal account. So similarly here also, sir, this sales return we will be categorized as a nominal account, right? And sir, is it income? No, it's not income. Then so it is considered as contra income account. It is considered as contra income account. The next is a bank loan. So bank provides a loan to you. So bank, if provide a loan to you, you have to repay that after some period of time. So bank loan is your liability, right? So that will be categorized as a liability, right? And bank loan, so you are a person, as a national person, you are borrowing loan from a bank, so that will be considered as your personal account. So next is prepaid insurance. So what is basically prepaid insurance is? Prepaid insurance means you have paid insurance premium in advance. So for example, the 12,000 rupees you have to pay for a 1 year for 12 months, but you have paid 14,000 rupees. So it means you have paid 2,000 rupees more, which is related to next year. That is known as prepaid insurance. So it's which kind of account it is. So if you are paying anything, so it's an expenses. And as per the traditional approach, it will fall under the category of your nominal account, sir. Right? Then what about prepaid insurance as per the traditional approach? If you are paying something in advance, so that becomes your asset, right? Because you are not going to pay in the future. And suppose if you are discontinuing the insurance policy from that insurance company, then insurance company is liable to repay you 2,000 rupees that you have paid in advance, right? So it will be categorized as asset as per the traditional approach, right? As per the modern approach. Or you can consider this prepaid insurance as your contra expenses as well, right? So this is the question regarding your identification of accounts which are based on modern approach as well as a traditional approach that we studied.